Hello and welcome to Big Deal. Now, markets at all-time highs, many deal flows happening, but big question on everybody's mind when it comes to economic revival is also whether infrastructure investments are really happening. And is it really going to turn the corner, and how soon? I have two important gentlemen with me this time on Big Deal who are in thick of action there. One investor and one deal maker. We have Suresh Goyal from Macquarie and Manish Aggarwal from KPMG. Gentlemen, so good to have you on the show. Now, Suresh, let me start with you because you have the moolah to invest. You have done some fairly large investments in the country in terms of infrastructure, and it is across the board, about $1.8 billion or so. What is your strategy right now, and what is the theme that you are going to follow as far as more investments are concerned?
So, thank you, Nisha. Pleasure to be on the show. So, as you know, Macquarie has been a long-term investor into India. We started our first fund in 2009, and since then we have been investing. As you rightly said, it's about $1.8 billion invested. We think that overall infrastructure sector is at the early stage of growth. A lot of assets have been built into the private sector, which have been financed by domestic capital, international capital, as well by the Indian banking system. But as we all know, there is a need to build a lot of new infrastructure. And while there is a need for new capital to come in and build that, but we also have to keep in mind that there's a need for recycling the investments that have already been made. So in the next few years, we think that the market would throw up quite a few opportunities for already built assets or near built assets to get moved from existing balance sheets into the hands of long-term investors like ourselves. And there are some other funds also which have now come into the market. And then ultimately the market will evolve into annuity-style returns that would be available to the long-term investors.
All right. So fairly positive when it comes to more investments, and we at a nascent stage. So Manish, come in on this. We have seen some bit of deals really happening. There is a Japanese player, JERA, which came into Renew Power. There is also the whole host of Canadian pension funds, as well as Fairfax and Brookfield, who have made fair bit of meaningful investments here. Macquarie had invested, and we are seeing some interest from Middle East as well. How is the traction when it comes to the deal space and infrastructure? Is there enough and more interest coming in from the foreign investors in particular?
Thanks, Nisha. Happy to be on this show. I think, as Suresh said, on an infrastructure side, there are two buckets. One is a recycling of existing capital because we have moved from a large part of a greenfield to a brownfield assets, which is where the investors are coming in at this point in time because they see a pre-development cycle not to their comfort, given the Indian experience so far. And then obviously as far as the new build is concerned, there we are yet to see a large part of activity picking up, except maybe the sectors like renewables where you're coming in the platform and participating in the build-up story. I think from an investor side, definitely we see a good amount of large sovereign pension funds as a one asset class. And then you also have a large utilities, for example, coming in. And again, as I said, interest is localized to a segment within infra, larger than the larger entire infrastructure as a play. But definitely we see a deal traction building up on the brownfield assets and the specific sub-segments within infrastructure, where the investors have got a little more comfort based on what's happening on the policy environment, what's the opportunity size as well.
So lots of aspects to look at when it comes to the investments. But one pocket I want to touch upon where most of the people in the industry and investment community are looking positive about the road asset space. How do you see the deal activity pick up on that? We also have an InvIT coming in that space.
See, on highways, you're right. I think that's a most active sort of a space because there the government did certain policy changes as well, whether relaxing the exit clauses, allowing the promoters to really let go some of the projects. So a lot of policy changes were done, which gave a lot of positive comfort to investors. And obviously, when clubbed with let's say the economic activity pickup, which was a challenge in some of the stretches that was driving the traffic. We are seeing, a deal activity in that particular space largely.
Right.
And then there is a lot of expectation and a buzz around the toll operate transfer model because that actually fits in the plug and play theme, which is what I see as a key across infrastructure where the investors are more comfortable with.
So Suresh, as an investor, is this the best pocket of investment for infrastructure currently? You have a fairly large portfolio in roads as well.
We have deployed about $500 million, like you said, one of the largest investors in this sector. We are beginning to see the momentum not only on the deal side, where there are a lot of opportunities available, but we are also seeing a lot of international investors having got comfortable with the way the sector has panned out.
That's right.
Wanting to come and invest into this sector.
Right.
So we are in a very interesting space at this point in time, but I must also say that perhaps the asset values are going a little north than what a long-term investor would like them to be.
So you are saying that valuations are rich, more rich than comfortable for an investor. But that's how the equity markets are also, that's what they're supporting.
Yes, absolutely. I think I would say whether valuations are rich or not, but expectations of the sellers certainly are on the positive side. But the good thing is that recently we had a successful InvIT, which gives access to a new source of capital for the same sector.
Right.
So if I look at it from the perspective of a long-term investor and the fact that there is an alternate pool of capital that has evolved, it is good for the sector.
It will also bring in sanity in terms of valuation because you have another peer comparison as well in terms of InvIT returns and InvIT pricing as well.
That's right. That's right. I think the way perhaps we like to look at it is that a sector which has multiple sources of capital available is a better sector to be in rather than a sector where generally people are shying away and there is just a lack of capital, but ultimately it starts to affect the capital pricing, asset pricing and asset performance.
So Manish, enough and more as far as deal making is concerned in the road area?
Yes, as I said earlier as well, I think it will really pick up depending on how this entire toll operate transfer model comes in, because then people will start looking at both your little bit of a stress in the highways that exist as a build up and on also the new capacity to be added through a toll operate transfer.
Can you say the same for the other area, which is airports?
See, the airport is a very interesting sort of a play. I think we did a civil aviation policy. For the first time, we had an integrated civil aviation policy. This year budget actually said that a lot of focus on the PPPs for the existing airports where we're getting a capacity choked up. We know that the way the traffic has grown, despite the last 2 years of a headwinds on the economic side, the growth in the traffic has been very, very high, and we are expected to be one of the top three markets going forward. So there is a very large sort of a ecosystem on the opportunity side. I think and obviously there are deals which has happened in airports as well. We as of now have only 2 large players. So I think the play for the investors to come in is sort of limited in that sense, right?
So Suresh, finally before we end the segment, more in roads and both airports, is that something that you would look at?
We look at the sector as a whole.
Yeah.
We don't have fixed allocations towards each specific sector.
In terms of your bullishness on these pockets?
We continue to be quite bullish on most of the subsectors in infrastructure. Clearly, roads has been one great success story for us.
Right.
So, of course, we would like to do more in roads.
All right. So, hold your thoughts there, gentlemen. We will talk more about the other area, which is the stressed asset area of infrastructure. And that is the prime focus of discussion whenever infrastructure is discussed all the time. And also remember, power sector, which way is that headed? Is that going to see more investment, especially the thermal power area? We'll talk about all that and more when we return, but do keep tweeting and leave you with some of the interesting tweets that you've got.